Today is Monday, May 1st, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freet, Vice President of Grain Research at ADMIS, and Alan Bush, the Senior Financial Economist. Steve, a lot of rain over the weekend. Any effect on the grain markets?
Most definitely. We've got wheat up about 20 cents a bushel, corn up maybe 8 to 10 cents a bushel, and beans up also 10 to 12 cents a bushel. In some cases, 15 cents a bushel. And I think that we have to divide the U.S. into two categories. There were 16 inches of snow fell in western Kansas. Temperatures were below freezing for as much as 18 hours. And so if you draw a line in the western third of Kansas, that entire wheat crop may have been lost. We're looking at a wheat crop this year of hardwood grain, a total of 760 million bushels of wheat. There may be 100 to 150 million bushels lost. So for the farmers in that area, it's devastating. If we don't have any other global weather situations as far as wheat is concerned, it's going to be tough to get over the 480 in the nearby wheat. 452 is a 38% retracement of 50% retracement of the entire move down, but we need a problem to get over the 480 area outside the United States. 1 to 5 inches, some in areas 9 inches of rain fell across the southern Midwest. So we had about half of the Illinois, Iowa corn crop planted. Maybe as much as 10% of Iowa and 20% of Illinois may have to be replanted because of these heavy rains. The good thing is that when we look after this week, the weather looks warmer and drier for most of the Midwest. So for wheat, this will help it grow out of its problems and allow the corn to be planted.
The funds continue to hold a record short position. Will they hold this position into the summer?
I think the main thing is we'll have to watch option volatility. So far, it hasn't really exploded or surged a lot higher. So the risk of a rally is maybe somewhat limited unless option volatility really breaks out. But they have a record short position in all grains, and so any other headline news could make them trigger at least a portion of that position. 980 on the nearby soybeans, 380 on the nearby corn are a level of pretty strong resistance. We would really need a big problem to push over those price levels.
With the wet weather, and I know that the forecast is a little drier in the weeks to come, but do you think farmers should be looking at this weather right now and maybe using it as an opportunity to lock in some prices?
We are hearing that farmers are pulling some of their sell orders above the corn market just to see how far this thing goes. And we're also a lot of questions as to how can they hedge what they have already sold as far as inventory is concerned. So a lot of them are asking what kind of call or call spread can I own? What kind of short-dated call spread can I own in order to hedge my risk in case there's further problems? The more educated ones are actually looking to selling puts underneath the marketplace, thinking that because of this, we may not see new lows made in the marketplace, and by selling puts below those levels, they can take in that premium decay.
Obviously allows a farmer to participate in higher prices, if that happens, so re-owning their crop to some extent.
Correct. I mean, you don't want to buy for stuff you haven't sold yet. It's double long. But as far as in the inventories that you've done, you probably want to get some risk involved as far as long calls. The other thing you can do is, let's say we go to 980 beans, or let's say we go to 380 corn or $4 D's corn, or let's say we go to 480 wheat. All of a sudden, those put premiums start looking good. When we were talking about corn going down below $3, wheat below $4, and beans below $9. So it kind of gives the farmer and even the speculator a little bit more to trade than what we had a week ago.
Finally, we do have a report coming out on May 10th. What are you expecting from the May USDA crop report?
It's going to be very interesting because the enumerators for the USDA is out in the fields right now. And so when you've got wheat that's flattened by heavy snow, and when you got wheat underwater in Arkansas and Missouri, it's very hard to put a yield on that. So, we may not see the complete reflection of this weather in the May report. But we will be getting some private estimates this week, and maybe those will be a little bit closer to reality than maybe what the USDA is saying. Globally, they were expected to raise wheat world carryout, they were expected to raise the bean crop in Brazil, they were expected to raise the bean carryout. And as far as corn is concerned, they were expected maybe to lower the carryout a little bit. Even though you got a record Brazil crop, it looks like the demand is underestimated globally.
Let's shift now from agriculture to the financials. Alan, last Thursday, the European Central Bank kept interest rates unchanged at record lows and maintained its asset purchase plan. Why has the euro currency been so strong lately if the ECB is keeping interest rates so low?
Well, the answer to that is that, for one thing, the ECB will probably back away from their accommodation. I think we'll start to see some rhetoric to that point later this year. So even though rates are still very low in the European Union, I think that will not be the case for long. Right now, nobody's talking about any type of rate increase this year or early next year, but I think at the end of next year or the following year, rates will be going up in the European Union, and at the same time, interest rates here in the U.S. are likely to increase, but at a measured pace. So interest rate differential expectations are turning against the dollar, becoming a bit more favorable to the euro currency.
Looking at Europe, are there still serious problems in some of the countries over there? I mean, Greece, are they pulling out of their issues at all? Is Turkey a problem? Is Italy a problem? I mean, which countries are still, putting weight onto the ECB?
Politically, there's still plenty of concern about the debt that Greece holds. We have the French elections coming up. That not as much of a negative influence as it had been more recently. So there are still plenty of problems in the Eurozone, but I think it's the interest rate differentials that dominate all of the geopolitical influences, and that should be enough to support the euro going forward.
What about the prospect of another country leaving the European Union, similar to what Britain did with Brexit?
If Marine Le Pen wins, which so far looks a bit unlikely in France, there is more of a possibility that France could leave the European Union. Right now, the polls are suggesting that there is only a 40% chance that Le Pen will win in this next round of presidential elections.
All right, let's talk gold for a minute. In mid-March through mid-April, gold futures were supported by a variety of geopolitical issues. However, more recently, these geopolitical risks appear to have eased a bit. Price of gold has fallen off. Is the bull market over for gold?
Absolutely not. The gold market has rallied $150 since the lows were put in December of 2016. So inflation globally is going to continue to increase. And in fact, it was in December of 2015 that we turned a corner from global deflation to global inflation. So we would expect the inflation influence to dominate and take the gold futures higher. The geopolitical issues right now a bit less intense as they had been, but quite a bit there overall. But it's the inflation influence that will dominate to take the gold higher, including new highs for the move.
GDP, Friday's GDP a little lower than anticipated. I think we came out at 0.7%, 7/10 versus the expectations of gain of 1%. This is the slowest rate of growth in 3 years. Can the stock index futures advance in light of weak GDP?
Absolutely. As long as interest rates stay relatively low, there's a tipping point where rates get too high. There's a specific point that we are looking for that would turn us from bullish to bearish. I believe we are not anywhere near that point. So with rates as low as they are here in the U.S. and globally, that dominant influence will continue to support stock index futures. And of course, just today we had another new historical high in the NASDAQ. So I would not be surprised to see further gains in all of the indices. This is not the beginning of any type of new bear market in the stock indices. Just to the contrary, there is plenty of upside left.
All right, thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.